full board meetings.
Oh, I maybe did know that. Maybe I just don't remember it, but it doesn't matter.
Why can we only see a shadow of Peter Morrison?
That's a good idea. Good question. I mean, I maybe I should close the blinds and turn a light on.
That might help.
No, well, you excuse me, I'll go do that.
Hey, we're now live.
Oh, that's a little bit better or worse, depending on your perspective. Okay, so are we all set to go, Kelly? Okay, it's 5:01, so I'll call the meeting to order. Could I have someone move that we approve the agenda?
Moved, Mike Blaney.
Seconded, Susan Cassidy.
Okay. Does anyone have any conflict of interest with the agenda items we're looking at tonight?
No.
Take that as a no. Tony, I guess you're
Sure.
on. This may be
Yep.
your first live show, right?
Anyway, yeah, I know Don's on in attendance, and so he's done the recap, and the recap has been sent out, and he always kind of starts with, first off, the asset allocations are all within the parameters that are outlined. And then the performance for the quarter to the end of March at 2.42% has been, if you kind of multiply that out by 4, kind of running like he said, looks like it could be an annualized yield of 9.68. That's not how we do run it. I mean, for the quarter, that's a good number, and very comfortable with it. That, we actually, when I'm looking at the numbers, even, as of last night, which I do, month to date, we're up another 2.13%. And that's indicative of what the markets are doing. As you guys all realize, the markets are pretty well all at peaks, whether it's the US, the Canadian, NASDAQ, even overseas. One thing that Don had mentioned in his recap was that we are, and we have had conversations, both Colin, myself, him, concerning coming up with maybe a better comparison, because what we actually give is just the indexes, and that's not indicative of the portfolio. And it's something that we're addressing, and just to give us a better benchmark, I guess, more than anything else. Because while, the TSX, the Dow might be up 7%, our portfolio is not just in those two. We've got a lot of things that are going on. So it's something that we are working towards, and we'll probably, if not the end of next quarter, by for sure the quarter after that, depending upon what we come up with, we'll have something better to report on that. As far as what we see happening over the next 3 months with the portfolio itself, we are seeing, while COVID is still playing a huge factor, a major factor, we do see, I think as everybody does, that there maybe is an end in sight. Although my personal opinion is this summer might be tougher on travel than last summer, because last summer we did have the Atlantic bubble, and it feels like, at least in Atlantic Canada, the number of cases are coming up. But I think this is really, across Canada itself and in the US, that while the vaccines are out and happening, we're still not really reaping 100% of the rewards, and this third wave of the variant seems to be playing a factor. So that will impact the companies that are out there, and the travel companies for sure, but just the general feel and the spending of people, which is indicative of how the markets react, because of the companies in there making money, and you have to spend money to make it. The second thing that has just come out in the last day or two, and really wasn't on the report that Don had prepared, is that the jobless claims in the US are at the lowest level for the second week in a row in this pandemic era, which is, again, a positive for an economy that we have seen suffer over the last year, which will, bear fruit as we go forward, and something that, we can kind of feel good about. Although, when you look at the number of cases of COVID, it's still kind of concerning. The third thing is the earnings of the companies themselves, both in Canada and US, are coming out with very good earnings with upbeat forecasts of what they see is happening. And again, I think that's also indicative of them being get a better read for what's happening, as far as the recovery. And as a result, all these are very good and positive. And as a result of this, in Canada, the Bank of Canada actually kind of has come out with an inflation rate that is 2.2% and is very much higher than what they anticipated or expected. And as a result, while they had indicated that maybe interest rates were going to stay down or very low till 2023, there's some indication they might bump up rates second quarter of 2022, which again is a sign that there's concern that inflation is there, which is again a positive for the companies and the overall economy. So we do feel that, not without volatility, but with caution, we will see over the next 2, 3, 4 quarters growth, and growth is what drives the market, and market is what drives the return. So, all these things taken into account feel very good. The portfolio itself is feeling very good. And again, we are just trying to work towards maybe a better tool to kind of measure us, rather than say, 2 or almost 3% for a quarter is good. It is good, but we'd like to get something, I guess, with a little better yardstick to measure us by. So that's kind of a quick recap. Things are okay. And again, definitely here and would take any questions at this time.
Yes, Tony, Mike Chamberlain here.
Yep.
Could you go back to the comparisons, the minuses and the pluses? I don't get that.
The minuses and the pluses.
Okay,
I'm not sure.
7.2 and then annual is minus 7.2.
Yeah, this is actually the return of these indexes for the first 3 months of the year. So if you look at the Dow Jones, it was up 7.2% from January till March.
Yeah.
The S&P, the 500, TSX, the MSCI World Index, and the 50.
It says annual minus 7.2.
Oh.
And
I think that is, something. Yeah, I think those are typos, Mike.
Okay.
Yeah, like definitely. I would call it a typo. I'd have to check with Don to ensure that, but that's really, if you're looking at it for the quarter, now the second quarter, we'd be adding that on and we kind of keep a running total on the right-hand side. Right. And I think that's just a typo. Sorry about that.
Thank you.
Any other questions?
Sharp eye, Mike.
Okay. Just one more comment on that. It seems to be a wider range than we usually get between the 4, from the bottom to the top.
Well, I tell you, really, 3 of them are actually equity indexes. One's emerging market, and one is bonds. And normally you don't get that big of a variance, but when things do start, and this is what gives us the volatility, it's not without saying we won't see it more, but definitely observation is noted, but that's just what it is, I guess.
Thank you, Tony.
Okay.
Okay. If there's no further questions, Tony, thank you very much, and Colin for attending the meeting and bringing us up to date with the post-closure fund. And,
that's great. Okay. Thanks very much.
Enjoy the rest of your evening.
Have a good night.
You too. Thanks. Okay, Mary Kay, if you'd like to share your wisdom on the first quarter.
Sure thing. Thank you. I'm just going to take a minute and share my screen with you all.
Sure.
All right. So as always, we're going to start with the balance sheet. So these are the assets, liabilities, and equity as of March 31st. So end of the first quarter for 2021. Not too many changes really this month from the previous month. I will highlight a few of them. Cash is down about $269,000 at the end of March. And there's a couple reasons for that. The first being we did pay some expenses. So you'll see the prepaid expenses are up. That was for our 2021 property tax. So what we do is we put it in a prepaid and then we expense it each month as we use up that property. And then the other one being the accounts payable is down about $128,000. That's just a snapshot in time of what expenses have come in and are owed as of the last day of March. All the other changes are really minimal or in the normal course of operation, so I won't go through all those details. But you can see we did finish the end of March. We had total assets of $22,608,000. If I scroll down here, it's not working. 1 second. There we go. If you add our current liabilities plus our long-term liabilities, we had liabilities of $10,517,000, and our equity, total equity at the end of March was $12,090,000. Any questions on the balance sheet? All right, moving along to the income statement. I'm going to bring my trusty spotlight out here for you if I can get it working. There we go. So I am going to focus on the annual year-to-date column. So that would be for January, February, and March, or the first quarter for 2021. So as always, starting with the regional planning division, this division had revenues of $55,382, which is exactly on budget, which is what you would expect for this division. Expenses for the first 3 months totaled $21,000, which left a surplus of $34,228, about $7,800 higher than what we had budgeted for the first quarter. For the planning and development division, we had a revenue of $377,000 for the first 3 months, which was very close to being on budget, about $697 higher than what we budgeted. And then on the expense side, those totaled $353,000, which was almost $12,000 under what we had budgeted. The majority of that being driven by the savings in operating expenses. And if you dive down there a little bit more, the majority of that is savings from our salaries and benefits. So that left a surplus for the first quarter of $24,290, which is $12,540 higher than what we had budgeted. So both very strong financials for these two divisions. That brings us to our solid waste division. So what we see here for the first quarter is we had revenue of $2,080,000. That was about $68,000 higher than what we had budgeted. And that's virtually all of this favorable variance is being driven by our garbage tonnage. So if you look at the spreadsheet in the back of your package that shows the tonnage that's come in, March was a very good month for tonnage, probably due to the nice weather. When the nice weather comes, people start to clean out. And so we did have tonnage that was about 900 tons higher than what we typically see. So it'll be interesting to see how that plays out over the next couple months, whether it stays high or it kind of corrects itself. So we'll be looking for that. And then on the expense side, we had expenses for the first 3 months of $1,564,000, which was about $88,000 under what we had budgeted. Virtually all our expenses are trending under. Doesn't mean that they'll finish the year that way, but that's where they are right now, except for these post-closing costs. And that's directly related to the higher tonnage because we do pay our post-closing based on actual tonnage. So for the first quarter, the landfill had a surplus of $515,919, which is about $156,000 higher than what we had budgeted. So again, very strong financials. On the recycling side, we had revenue in the first quarter of $130,000, and that's almost $30,000 higher than what we had budgeted. We are seeing the prices of our materials being higher. The only one that's trending lower right now is our corrugated cardboard. So we are benefiting from the higher market prices. And then on the expense side, we had expenses of $339,000, which was about $13,000 less than what we had budgeted for the quarter. And that's really being driven by our equipment costs. We did have some savings there. So that leaves the deficit for recycling of $209,000 for the first quarter, which is about $43,000 better than what we had budgeted. So again, outperforming the budget with regard to recycling. Adding the landfill and the recycling together gives you a solid waste surplus of $306,753, which is almost $200,000 better than what we had budgeted for the same time period. So again, another strong performance for solid waste division. And then our last division is power generation, which is always the one that we keep a close eye on. But it's actually, I was very pleased to see where the revenue is going this quarter. So we finished the quarter with revenue of $250,000, which is just slightly over what we had budgeted. So that's good news. We are making progress. March's kilowatt production was actually the highest it's been since the end of 2019. So that's good news. We're going in the right direction with regard to that. And then on the expense side, excuse me, we had expenses of $297,000, which was about $49,000 higher than what we had budgeted. There was some maintenance performed on the engines, but it was maintenance that's expected. So we will watch this closely, but you may see that this will level out because it is included in this budget for the year. It's just not included in the budget for the first quarter. So adding all of our divisions together, you come up with a consolidated surplus as of the end of March of $317,964, which is almost $171,000 higher than what we had budgeted for the same time period. Excuse me. Are there any questions on the income? I don't usually take you through the remainder of the schedules, but I do want to just quickly show you power generation. You will see we are going in the right direction. 2021 has trended higher than the previous 2 years for the same time period, so that's good news. And then on the garbage tonnage, as I was talking about, we had a significantly good month in March. So we had tonnage for garbage of 6533 compared to our 5-year average, which was only 5623. So again, good news there. And I'm just going to stop sharing this for a second. And that's all the comments that I had prepared, Peter. If there's any questions, I'd be happy to take them.
Okay. Are there any questions for Mary Kay? Thank you, Mary Kay. Susan, you're on mute. You're mute. I mean, if you were saying something.
I was just saying that I'm quite happy with it. It looks really solid.
Yep. And anyone else have any comments? Okay. Thank you very much, Mary Kay. It was, as always, a great presentation, and the presentations are always quite understandable. At least I can understand what's going on. So that takes care of the business on the agenda. Does anyone have any general discussion or direction to staff or questions before we close out this evening?
No, other than just to say, if I may, like, it's been fun, guys, and depending on how May the 10th happens and how many weeks or months we wait to find the results out, or before any of our councils can be active again. God knows when we'll see each other again, if we will. Because it's going to be a minimum of 6